All right, welcome to The Explainer. Today, we're diving into one of the biggest expenses for any business out there, payroll. But here's a thought. What if I told you that thousands of companies, maybe even yours, are overpaying their payroll taxes every single year and they don't even know it?
It's a huge question for any business owner, right? And when we talk about payroll taxes, the surprising truth is, for a whole lot of businesses, the answer is a hard yes. They're leaving real, significant money on the table, and it's happening completely under the radar.
And look, we're not talking about a couple of rounding errors. No way. This is about systemic overpayments. Stuff that's literally built right into the structure of a company's payroll and benefits. It's a problem that's just hiding in plain sight, buried deep in all that tax code complexity. So let's get into it. The hidden payroll problem. Okay, so where is all this money actually hiding? Well, it's probably not where you think. It's not in your income tax, it's not in your sales tax. The issue is almost always buried deep, deep inside your payroll taxes. Specifically, how a little thing called FICA tax gets calculated. Now, most of us know FICA, right? It's those federal taxes for Social Security and Medicare. And we usually just think of them as a fixed cost, a simple percentage of payroll that you can't do anything about. But here's the secret, the key insight. How you structure things, like your employee benefits, certain kinds of pay, even how you handle tips, can totally change your FICA liability. It's way more flexible than it looks on the surface. And it's so easy to see how this happens. Most businesses run on a few totally reasonable assumptions. Things like, oh, my CPA caught everything. Or payroll, that's just a fixed, unchangeable cost. And these are perfectly logical thoughts. But, and it's a big but, they can unintentionally lead to thousands, even tens of thousands of dollars in overpayments over the years. Okay, so now for the good news. Here's the encouraging part. Once you realize these overpayments are tied to structure, not just basic math, you can actually start looking for them. And this is where a specialized review comes in. It's designed to find these refunds and credits that a normal accounting process would almost definitely miss. Think of it like this. A standard audit is like proofreading a document. It checks to make sure all the words are spelled correctly and the numbers add up. But a specialized review, that's like analyzing the architecture of the whole building. It goes way deeper, looking at the very structure of your compensation and benefits to find those hidden opportunities. Let me give you a perfect example of what we're talking about. It's called the FICA TIP credit, or IRS Section 45B. For any business in the hospitality industry, this is an absolute game changer. And get this, it's not a deduction. It's a dollar-for-dollar credit for the FICA taxes employers pay on employee tips above minimum wage. This is literally the IRS giving you money back, but so many businesses just aren't claiming it because they have no idea it's even a thing. So you see, a deep review like this can uncover a bunch of opportunities all at once. We're talking about finding payroll tax overpayments from the past, spotting those missed FICA tip credit opportunities, digging up savings in your benefit structure. It's really about two things: getting money back from previous years and plugging the leak so you save money going forward. And just to be super clear, we are not talking about small change here. The scale of this is massive. We're talking over $100 million in credits processed for businesses through these kinds of reviews. This isn't some tiny, obscure loophole. It's a major, totally legitimate financial recovery strategy that's built right into the U.S. tax code. But, and this is really important, there's a catch, a big one. The clock is ticking. The IRS gives you a strict 3-year look-back window to reclaim these overpayments. What that means is every single day that goes by, you could be permanently losing your chance to get back the money you overpaid 3 years ago. That window is always closed. So let's talk about how this actually works. When you hear specialized review, I get it. It might sound complicated or like a ton of work. But the process is actually designed to be super straightforward and pretty much hands-off for you, the business owner. And it's all done in a way that is 100% compliant. Let's walk through it. Okay, so it's a simple 4-step process. Step 1 is just an eligibility review to see if this even applies to you. We're talking payroll structure, tips, benefits. If it looks promising, then step 2 is the credit analysis, where specialists dig in and identify all those potential overpayments and missed credits. Then step 3 is the guided process. This is where they handle everything for you. Fully documented, totally IRS compliant. And finally, my favorite, step 4, the refund or savings. You either get a check in the mail or you see your future tax liability go way down. All right, that brings us to maybe the most important question for you right now. Who actually qualifies for a review?
Let's figure out which businesses are the most likely to find these kinds of hidden savings.
Okay, so here are some basic qualifiers. Generally, the opportunities really start to become significant once you hit 5 or more W-2 employees. But the real telltale signs are things like receiving employee tip income. That's a huge flag for that FICA tip credit. Or having complex compensation or benefits packages, because that's where structural savings hide. And another big one, if your business has seen a lot of growth or changes recently. Because payroll systems, they often don't keep up, and that's where errors creep in.
And I really want to stress this. It's not just for restaurants and hospitality. I mean, yes, they are absolutely strong candidates because of that tip credit, but we see huge recoveries in medical and healthcare, construction and trades, professional services, even retail and SaaS. Basically, if your business has a payroll structure with any complexity at all, you could be a candidate. Okay, let's bust a couple big myths right now, because these are the things that stop business owners from even looking into this. Myth number 1, my CPA already handles this. The reality, your CPA is fantastic at what they do, filing your taxes and keeping you compliant. That is crucial. This, though, is a totally different specialty. It's about credit and recovery reviews. It actually complements the work they do. Myth number 2, payroll taxes are just a fixed cost. And the reality is, that's just not true. As we've seen, with the right credits and adjustments, you can seriously reduce your liability. So let's boil this all down. What's actually at stake here? When you don't look deeper into your payroll, what are you potentially missing out on? Let's get really clear about it. It really comes down to 4 major opportunities waiting for your business. First, payroll tax overpayments. That means getting significant refunds back from years of miscalculated wages. Second, the FICA tip credit. We're talking dollar-for-dollar credits, especially for hospitality. Third, prior year refunds. This is all about recovering funds from the last 3 years before that window slams shut. And finally, future liability reduction, optimizing your payroll to create ongoing recurring savings year after year. And this is super important. A legitimate process like this is always compliance first. The entire thing is backed by elite legal expertise, including a top 40 under 40 tax attorney. That's to make sure every single claim is fully documented and 100% defensible. It gives you total peace of mind. We're not talking about finding sketchy loopholes. This is about correctly applying the tax code as it's written. And that brings us right back to the most critical piece of this whole puzzle: time. As the saying goes, the IRS allows amended returns going back 3 years. If you've overpaid FICA taxes, those funds may still be recoverable, but the window closes. And it's unforgiving. Once a quarter from 3 years ago is gone, the chance to get that money back is gone forever. So at the end of the day, it really comes down to this. You won't know what you could be owed until you check. You can assume everything's fine, or you can take a quick look. It's really that simple. And that really leaves us with just one final question to think about. After seeing how easily these things can hide inside a payroll system, what hidden opportunities are waiting in your payroll?